welcome to Bloomberg Quint. I'm Yash Upadhyay, and joining me for a very special conversation is Mr. N.S. Venkatesh, who is the Chief Executive Officer of the Association of Mutual Funds of India, on the sidelines of the November fund flow data that has just come out. So thank you, first of all, for taking the time out and speaking to us. Well, all the headlines, they look extremely disappointing at the moment. Equity inflows are down month on month by almost 78 to 80%, down for a third consecutive month. And most importantly, there's been that sharp drop from the levels of almost 6,600 crores to 1,300 crores in the month of November. What are your thoughts there?
I would say that there's a positive in the sense that the AUM is at around a historic high of 27 lakh crore. Mm-hmm. The SIP numbers are actually showing a very positive trend. But having said that, it's a fact that the equity flows have come down to around 1,300 crores compared to 6,000 crores previous month. Mm-hmm. I think that essentially when you look at it, it could be mainly, one of the reasons could be that there is a profit booking which has happened by the HNIs when they have taken out their money. And they are trying to reassess the situation and see that whether they should re-enter at this level when market is at its historic high.
Right. So then in that case, we've been speaking for such a long time about mutual funds sahi hai, and the kind of efforts that the industry has taken in order to change this philosophy of people trying to book profits and trying to time the market. What, according to you, in that case, should the industry do in order to mitigate this and in order to change this?
Our message is loud and clear that mutual funds sahi hai. Our message is again loud and clear that essentially that you should not time the market, you should stay invested and stay invested for your long-term goals. So that is getting reflected through the SIP sort of route, mm-hmm. where essentially 8,272 crore is the SIP route, which is again an all-time high. Right. Compared to last time it was around 8,245 crore, this is 8,272 crore, around 27 crore it is still higher. So I would say that maybe the retail investors are taking that message in a very, very positive sort of a sphere and remain invested. They are not timing the market. At the wholesale level, maybe we need to again reinforce our communication at the wholesale level to tell them that look at the markets, look at not timing the markets, stay invested, and for your goals you stay invested. But in the wholesale, it is sometimes a trading game. Mm-hmm. So naturally they trade in and out. So to that much extent, these sort of things will happen. So when those sort of things happen, then the mutual fund inflows also take a volatility in the inflows and outflows.
Sure. Like you rightly mentioned, that, it is clearly heartening to see that the SIP number continues to grow and has hit an all-time high of almost 8,273 crores in the month of November. But also at the same time, from what we understand from our interactions with most of the channel partners and the distributors, is that on the ground it has become extremely difficult in order to sell mutual funds as a product. In that sense, could you also help us understand what has been the number of new SIP accounts that have been added in the month of November vis-a-vis the previous month, or basically any net addition of SIP accounts that we've seen?
The net addition you saw this month was around 5.5 lakh folios which got opened in the month of November, mm-hmm. which was more or less in tune with what you saw in October. So I think there is a steady number there as well. It's not as if the numbers are falling off dramatically as what you have heard from your channel partners. But we believe that we have reached at around 8,000 crores, so maybe they will take a little bit of a pause, reinforce their strategy, and again talk to the clients and go into the B50, B70 sort of cities and towns where there is enough wealth, and again propagate the SIP there. Then we will see more flows coming in, more accounts getting opened, and to that much extent you will actually see the SIP numbers going up and up.
But sir, then even in that case, with the 8,200 crores coming in via the SIP book, the mutual fund flows coming in purely from the equity or the growth-oriented schemes, on a net basis, there is still that pressure in terms of redemption. Can you help us understand more with more clarity? Basically, what are you understanding from the November data that has just come out?
No, I'm again telling you that one is essentially the profit booking which would have happened. The second thing could be people waiting in the sidelines because they are seeing the market at an all-time high, because they are the people who are timing the market. So they are trying to see that whether I need to re-enter the market at this stage through the mutual fund route at this particular point of time. So I think both these combination of factors are reflecting in the numbers that you are seeing.
Okay. Now, sir, coming on to the other individual categories, and I'll start first with the debt side. Obviously, the liquid fund category, that accounts for a bulk of the overall mutual fund flows. Almost 70 to 75% of the overall fund flows come from the liquid category. But there has been a sharp drop from almost 90,000 crores plus in the previous month to just about 7,000 crores. Obviously, there is that change with respect to the regulator imposing an exit duty on investors who withdraw their investments within 7 days. In that sense, do you think that going forward, we'll have to adjust for the base effect, given that this would be the new normal, or are we likely to see those funds flow into other categories like the overnight fund?
Yes, we saw a little bit of money going into the overnight fund. Somewhere around 20,000 crore is what we saw the overnight fund. Maybe people are trying to reassess the situation, the new reality of an exit load coming in for a mutual fund from 1 day to 7 days sort of period. So I think they will reassess, and then once they see the advantage of maybe getting invested in a liquid fund where they can plan their liquidity flows beyond 7 days, those monies will start coming back again into the liquid fund. So I think that will happen. So I would say that we should wait and see for the next couple of months to see how this pans out before saying that there is a new base that is getting built up.
Okay, sure. While there has been a moderation in flows in the equity schemes, or you can say that there has been flows which have also turned into negative for some of the categories like a value and contra fund. The large and mid cap funds saw an outflow for the first time since the data that we have starting from April. The one scheme that had seen moderation in outflows saw a big outflow number this time. That is the balance fund category, almost 5,000 crores going out of the system in the month of November. Your thoughts there, sir?
I think people are again trying to because balance fund is a game of dividend. So people are trying to say that whether dividend is going to get taxed, not taxed, those sort of things. So some clarity should happen when the new budget is getting presented by the finance minister. So if the what we read from the newspapers, which says that DDT is going to get abolished, or maybe dividend tax will not be levied at the hands of the fund, but maybe levied at the hands of the investor. So I think those sort of clarities coming in or emerging should help the monies to come back into the balance funds.